right, we have to talk about FOMC. Pretty clear. Okay. Right now, FOMC is already happening as we speak, as this recording is going on. Jerome Powell is going to be coming out on the 26th US timing, so Singapore is going to be 27 around 2:30 a.m. Jerome Powell is going to come out and he's going to be talking about how the FOMC is going to be. So today, we've got to talk about expectations. Okay, let's talk about expectation. What we're expecting from the FOMC. We're not getting an SEP in this current FOMC, SEP being Summary of Economic Projections. It's going to be coming out in the September reading, so that's when we will most likely see how the charts are going to be like. I am very interested to see what they are looking at for the inflation rate by the end of the year, and also for the federal funds rate as well for the end of the year. Those are going to be the interesting number that we have to look at for the next FOMC SEP. So for this current FOMC meeting, chances are the entire street consensus, let's be honest, we all still have it pointed at a 25 basis point increment. So the street consensus have this 25 basis point increment. This is kind of just like in a two different point of view. The first being Jerome Powell coming out to talk on multiple occasions, saying that he is still very, very adamant in having two more interest rates hike in the year. So that means we are left with July, September, October, and December. We got 4 more meetings for the end of 2023, and out of these 4, Jerome Powell is expected to raise 2 more times. Okay, expected. So what this would actually means is that currently from the previous FOMC that we actually had, we got a pause. Okay, which why the market was quite happy about it, but Jerome Powell has to come out to say that, oh, we're not done, don't worry about it, we're not done, that we could easily just raise up rates again. So personally, I do think that there is a good chance that we might not even see 2 more times. We might actually just see it 1 more time, being this meeting, and then in the next FOMC SEP, when it actually comes out, they might actually just lower it completely. Okay, so this is where my argument actually comes in. Do understand that I am still pretty bearish on the whole entire economy, but whatever I'm going to be telling you today is going to be siding towards the bullish side. Okay, I do not want to be, biased to my own theory as well. I do want to say it as it is, because this is the current fact in the market. Okay, so I do think that the entire FOMC, the whole Federal Reserve, okay, they are going to most likely have this struggle between a 25 basis point increment and a pause. Okay, the reason being is that inflation basically is already starting to flatline or trend down significantly. Of course, it's easy for you to actually argue the fact that right now inflation is currently still at about 4% or so, which is times 2 of what the long-term average inflation that we actually want. But the thing is that for this current the next 2 inflation numbers that we're going to be getting would most likely give us the year-over-year down to 2%. So effectively, by the time we actually hit October, we're going to be getting 2% inflation year-over-year. Effectively the case. Unless something drastic were to happen, inflation is most likely going to be down to 2% in the next 2-3 months. So yeah, basically if we're down to 2% and the Federal Reserve do not start to pause on time, it's basically this very weird balancing game. Okay, because right now let's just treat this line, for example, this is one line, and if the FOMC, the Federal Reserve in general, what they're trying to do is they're trying to get as close to the line as possible and stopping right before this line. But the thing is that if they were to just stop a little bit afterwards, they're going to be here, which is not exactly what we want either. Okay, what we are more afraid of is that the Federal Reserve just zoom all the way, crossing the line completely. That's what we do not want in the market, because if that were to happen, deflation is going to be happening, and that's a whole nother situation that we have to talk about. So right now, what the Federal Reserve is doing is that they're trying to get as close to the line as possible. Right now, they're about here, and they're trying to see if they can actually bring the line closer to them instead of them actually moving. Because for them to actually move, instead of moving the needle themselves, then it's going to be a different situation from there on out. So right now, I think that because in the previous FOMC meeting that actually happened, it was pretty much unanimous that everyone was thinking that we definitely need another 25 basis point increment. However, I think that when this FOMC, this current FOMC that we're going to be having, when the minutes actually come out next month, I have a strange feeling that they are probably going to be they're going to be more dovish on this FOMC. I think that they're going to be a little bit more like, core inflation is kind of trending down as well. Energy prices is not really that big of an issue. Food prices is not really that big of a contributor anymore. And rental prices is basically the only thing that is still persistent, which we do see them coming off in about the next 6 months or so. So maybe we can just pause, we can just start the pausing cycle. I feel that might be the tonality in the FOMC minutes. So when that actually happens, okay, this is where the minutes is actually very important, okay? Because the thing is that basically what I feel Jerome Powell is going to come out to say is that, for example, if they do pause, Jerome Powell is going to say, we're pausing, okay, we're pausing, but don't forget that we still think that 2 more interest rate hikes coming. 2 more interest rate hikes. He's going to scare the market, okay? He do not want the market to suddenly be like, okay, let's spend money now, okay? Because we don't have to worry anymore. Inflation is basically dead. Interest rate is going to go downwards from here on out. So just spend money, okay? And that's kind of where people would usually be a little bit more afraid. Because the thing is that, it's uncertain because Jerome Powell is going to be, we're not sure. But in the minutes itself, it's going to be showing a different tone to the whole entire thing. We might actually see the whole entire minutes just telling us that, it's not a unanimous decision for us to actually go with a 25 basis point increment, or it wasn't a unanimous vote for us to go with a pausing cycle. And then basically in the minutes, you can kind of see how the argument is like. So that's kind of what I want to see. But personally, I think I will still go with the street consensus, which is a 25 basis point increment. And technically, it kind of plays according to whatever the market is. Because right now, the market has already priced in a 25 basis point increment. So if you think about it that way, let's say, for example, if you're invested in the long run, you're bullish on the market, okay? If we were to get a 25 basis point increment, basically you meet on target. Nothing's going to be happening. You're not going to lose money as much. And if you goes to a pausing cycle for good, you are definitely going to rally, because the market is definitely going to go up because we're already pricing in a 25 basis point increment, and now we're getting a pausing cycle that comes earlier than expected. Of course, the market's going to rally. But of course, if Jerome Powell were to come out and actually, debunk some of the things that he might actually want to talk about, I feel that he most likely want to talk about rental prices. I feel that rental prices has been the main topic that we have been talking about for the past 5 months of reports, be it your inflation, be it your CPI, your PCE, employment, whatever it is. I think rental prices, shelter prices, this has always been something that we're talking about. And I have a feeling that you also talked about the improvement in core inflation that has actually been happening in the whole general market as well. So I think these are the main points that he would actually bring up. I don't think there's a lot of other thing that is happening at the moment for the Federal Reserve to actually have any sort of abnormal reaction to. So I am quite excited to see what the FOMC is going to be coming up with. Pretty sure that a 25 basis point should actually be coming out. 50 basis point at the moment is completely out of the possibility already. I think, it's not completely out of the realm of possibility just yet. I think there's still like a 2% chance of happening. But honestly, with all the data set that we actually have and whatever that we have been reading up in the past month, I'm pretty sure that we are either going to be starting the pausing cycle early or we're going to be getting a 25 basis point. Personally, I do think that a 25 basis point increment should happen. And what would actually happen is that for the next FOMC, we're just going to start the pausing cycle as it is. I think Jerome Powell is kind of fronting a little bit. He's just worried that people just start spending a lot of money for no reason. I do think that a lot of people, probably like myself as well, think that this would most likely be the last rate hike that we actually have for the year. And then effectively, we usually take about 14 months for us to actually start to cut any sort of rates after such a rates hike cycle. I do think that the time taken for us to actually start to cut rates would be significantly lower. I don't think it's going to take up to 14 months historically. I think that for this current cycle, we would easily have to start cutting rates in about like less than a year. I would easily say 10 months or even lower. Okay, and that's where you basically see 2024 basically just complete pausing of rates, and you're just gonna see rates just stay there as it is. Then that's where competition comes in. Hopefully, some banks that will show us some slightly more competitive rates to help with the mortgages and the loans and such. But yeah, I think that's kind of my expectation for this FOMC. It's not going to be that long. I am going to be keeping my eyes peeled for this FOMC thing. But anyway, thank you guys so much for watching, and I'll see you guys in the next one.